If you currently trade supply and demand or you're struggling to trade supply and demand, I can guarantee you in this video, I am going to help you out significantly. Not only am I going to cover how to draw these zones, what to look for, but I'm also going to be sharing with you guys a little tool that I like to use to help me confirm that a supply or demand zone is truly valid. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so I want to go ahead and start off by looking at a demand zone that I was watching today on NQ. Now, I just got done making a different video on how supply and demand zones, they've kind of changed in these last few weeks. So I do want to go over that with you guys here. But originally what I would do as far as a demand zone is I would mark the lower wick of the red candle before a very large aggressive move up to the open of that red candle before the large aggressive move up. So originally I would keep my demand zone looking just like this. And I also have tons of other supply and demand videos on my channel, so I will be leaving those down in the description as well, just in case I don't touch on everything in this video. But like I was saying, originally I would mark it just like this. But what I have noticed recently in this market is that they have been liking to react off of the wick. So because they've been reacting off of the wick recently, I started marking that as well. So now this is how my demand zone would look. Again, this is based on the 1 hour time frame today. And you can see today that the literal dead bottom was at the very beginning of this red wick right here before the large aggressive move up. So going forward, what I want you guys to do is start marking this wick. Now, we don't want to simply just buy because price comes down to the wick or sell because price comes up to the wick. Always we want to wait for confirmation. But that is what I've noticed recently in a trade that I actually ended up taking last Friday was based off of a 4 hour supply zone wick. So looking right here, this was the main area I was looking for a reject last week. So in a supply scenario, we're going to mark the upper portion of the green wick. And then originally what I would do is I would mark the open of that green wick. And then this would be my supply zone. As you can see later in the week, we ended up hitting it and flushing down. But again, what I've noticed is that they have been liking to react off of the wick. So now what I'm doing is I'm marking the upper green wick to the lower green wick, and now this is my supply zone. So again, we can mark both of these areas, but we don't know which one price is going to react off of. Now in this scenario, it was only like a 20-point difference. So the beginning of the wick was at 20253, and then the open of the body was at 20270. And then here's another demand area right there that you could have watched. But anyways, the trade that I actually ended up taking is if we break it down to the 5-minute time frame, you can see that we fell just short of the body, but we ended up rejecting right off of the wick. So I personally got short on this candle before catching a nice little flush down. And as you can see, that literally marked the exact high of day. So I would say going forward, mark the wick as well. And then we're just going to have to judge based off of price action if price is either going to react off of the wick or if it's going to react off of the body. But I would hate for you guys to miss out on trades because you're not marking the wick. And that's one of the main reasons why I wanted to make this video. So now going back to today's 1 hour demand zone, I want to talk about what to look for when actually getting into the position. So here's our 1 hour demand. Again, we smacked the very dead bottom of it today. And this trade actually ended up confirming on the 3-minute. Typically what I will watch intraday is a 5-minute, a 15-minute, and a 2-minute. So I personally was not watching the 3-minute, but the 3-minute did end up confirming. So this is exactly what I would look for every single time we either touch a demand zone or every single time we touch a supply zone, except flipped upside down. So let's pull up inverse NQ. This is what I would look for if price were to come up to a supply zone. I'm looking for a reject with a candle kind of like this, or just a long upper wick in general, and then an elevation in volume. So if we hit a supply zone and we get a candlestick something like this, that confirms a short entry with a stop loss right above the high. But as far as today on NQ, when we actually hit the demand zone, when price came down on that 3-minute time frame, again, I would like to see either a long lower wick or a candle something like this, as well as an elevation in volume. It could be a green candle, could be red, doesn't really matter. What's most important is that we're hitting that key level and we're getting this long lower wick with the elevation of volume, which is telling us that buyers are coming into the market. Or again, in the last scenario, sellers are coming into the market at that supply zone. So now that you guys know how to mark these zones and kind of what to look for, the hack that I really like to use, which gives me a lot of confidence when trading supply and demand, because if you really think about it, I mean, this is a pretty large zone on NQ. Like, we can get a better guesstimate on where price is going to react by just watching the wick as well as the open of the body. But if you're just watching this entire zone right here, this is about like what, almost a 60-point zone. That's a lot on NQ. So I'm not trying to guess where is price going to bounce in the zone, but the tool that we can use that's going to really help us understand are there truly buyers or sellers at this zone is going to be through using Bookmap. So I do have tons of videos on how to use Bookmap on my channel, but I do want to touch on it in this video as well. But pretty much what Bookmap is it's a combination of your level 2 and your time in sales. So level 2 is just limit orders in the market waiting to get filled. Time in sales is aggressive orders in the market participants saying, get me in right now. So if I were to buy market, I would be considered an aggressive buyer. If I were to sell market, I would be considered an aggressive seller. Now, the portion that's considered your level 2 is going to be these shaded areas right here. So we do have like this little color wheel up here, or color grid, whatever you want to call it. But the further to the left the color is, the least amount of buy and sell orders. The further to the right, the more buy and sell orders there are. Now, how can we tell they're buyers or sellers? Well, currently price is trading at 58.21 on ES, so everything under this is passive buy orders, and everything above current price is passive sell orders. So buyers waiting to get filled right here, you can actually see that they're starting to get filled. And then if price were to trade up into this area right here, there are passive sell orders waiting to get filled. Now, what the bubbles are is these are your aggressive buyers or sellers. So the people who are buying market or selling market, and then your passive buyers and sellers again are represented in this shaded area. Now, how can we use this to our advantage when trading using supply and demand? And actually going back to the NQ example today, I'm going to show you guys something very interesting. So looking at this screenshot from earlier, again, that is the same exact NQ zone that we were watching, 20300.75. As we see today, what was the dead bottom? 20300.75. Now, if we're using Bookmap and we have it up right next to NQ, what do you guys notice happened when NQ came down and touched the very beginning of that demand zone? We can see that Bookmap is literally showing us that there is a ton of passive buyers sitting at the very beginning of that demand zone. That is what I look for, because had we came down to 20300 and we didn't see any buyers, then there's a good chance that price was going to go lower into the demand zone before finding any buyers. So as we dug deeper into that demand zone, I would be looking at Bookmap and looking for a large set of buy orders waiting. And then what we need to wait for at that point is that we come down, we hit the level like we did in this scenario, and then we're looking for some kind of bullish or bearish reaction depending on if we're trading supply or demand. So again, we had that marked zone right there. Price came down. Bookmap clearly showed us that there was a lot of buyers. And then if we break it down to that 3-minute time frame, that is what ended up confirming the long entry, as we can see right here. So it's a mixture of a lot of different things to help you identify a high probability setup in the market. Because had we formed this candle in the middle of nowhere, I don't care about it. But because we had a key level, we came down to it. It was very, very clear that there was passive buy orders, large passive buy orders sitting at this level. And then on top of that, we got the bullish confirmation and the bullish volume that set up for a high probability long entry with a stop loss right below this low. I want to go ahead and show you guys one more scenario where I use this to my advantage to capture a beautiful short entry on QQQ. So looking at my morning notes, what I said is I was watching QQQ for a 4-hour supply zone at 455.3 to 461.4. It was a larger zone, so ideally watching the very beginning, and then SPY as well was in a 4-hour supply zone. So as QQQ started to trade up towards that supply zone at 455.3, I started to notice that there was very large sell orders on the ES futures while SPY was in supply and QQQ was entering supply. Now, the reason I went with QQQ is because it rejected at the very beginning of the zone. SPY was a little higher in the zone at that time, but you could have traded either or, just really personal preference. But because I started to notice these large block of passive sell orders getting filled up at the supply zone, and SPY and QQQ being in supply, as QQQ started to reject off of that zone and getting an elevation in volume, that is when I entered short on QQQ, would stop out right above this high right here, and was able to capture a 100% move on my contracts. But that is going to wrap up this video on a little hack that I like to use when trading supply and demand. Hopefully you guys did find value, and if you guys did, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.